This is Rob Roy, and welcome to the Elliott Wave Options S&P 500 U.S. market update. Hope everybody had a great July 4th holiday weekend. Here it is. Here's the new hat. As promised, I really like this one. If you do like it, let me know. In this recording, we're going to do something that we haven't looked at in a very long time. And in addition to that, I have a very special announcement. So without further ado, let's get to the charts. For our timestamp, it is 10:32 Eastern Time on Monday evening, so I might actually get to bed at a decent hour tonight. Looking at the futures, we are currently down 13 points. We were up a little bit after hours, actually a perfect zigzag pattern in the 3-minute futures chart that I watched that peaked out right at 9 p.m. Hit its target, 100% extension target, and then we retraced from there, and we've more than retraced the entire after hours move to the upside, obviously, since we're down, but just pointing to a slightly lower open at this point, but a lot of time between now and when the market opens. The last recording, we talked about this descending triangle where we had this major support right here at 300 on the SPY and this descending line here. Clearly, we have broken out. We talked about July 1st being the first trading day of the month, likely an up day, which it was. So that gave us the confirmation of the breakout on the 30th, which was the end of quarter and also pension rebalancing. And we've continued to move to the upside from there, which brings us to, let's take a look at this zigzag that we've been talking about. And here's this cool new zigzag tool, which, by the way, is incorporated in the new software release, which I'm going to tell you about in a second. But look at the C-wave extension here on the zigzag. It really overlaps the 5. It's right dead on where the 5 is of the 5-wave pattern. So the 100% extension running right through where the 5-wave top is. So 2 different qualified patterns giving you the same price target usually gives you a higher percentage chance of accuracy. So talking about this zigzag tool, and we talk about this quite often in the Trade Finder. And by the way, if you haven't registered for Trade Finder, please look, there should be a link up on the top of your screen. And if not, look in the comments section under the video. You can sign up for Trade Finder, free. We do it every Tuesday night. And as I mentioned, quite often in the Trade Finder, they talk about this tool, how this software, how do we get to the software. Years and years ago, when I first started trading Elliott Wave, which was 2001, for those of you that have been around for a while, I realized that nobody can label Elliott Wave charts by hand. You need software to do it. So I set out to try to find what was the best software program available. I felt that ProfitSource was the best one. I hooked up with those guys, and we've been chatting back and forth ever since. They've liked some of the things that I would use, like this creating a zigzag with fib extensions and retracement. So they created a zigzag tool, and these things, a few of these things, have been incorporated in the brand new software release, which is literally ready to come out this week. So what we'd like to do is give away a free copy of the new software, which is also going to include my search parameters that are utilized to identify alerts. All you need to do is leave us a comment at the bottom of this video. You'll go into a pool, and on Friday evening we will we'll pick a winner for a free new copy of the software. So hopefully you'll enjoy utilizing it and sign in with a Trade Finder every Tuesday night and learn how to use it, basically. So that's where we are with the market. Now, what I wanted to do, I mentioned also in the intro that we're going to look at something we haven't looked at for a while, and that's copper, which is sometimes referred to as Dr. Copper. Copper got its name, or Dr. Copper got its name, from the fact that it has a very good historical record of picking economic turns. So it's a indicator of the business cycle or the economy as a whole in general. Taking a look at the chart of copper, you can see that we had this perfect downward zigzag pattern. So we moved down to the A wave and had a 38% fib correction right there where the B was. We moved down. First target 61.8. For the extension, we blew through that. An extended target would be 100, blew through that. A further extended target would be 161.8, which is where we wound up at those March lows. So copper was kind of going along with the fact that, yeah, the economy is weakening quite a bit with the virus. If there was any doubt about how the economy was going to handle the virus, you could clearly see that there. So from the bottom, where do we go? And in an effort to speed up time here, respect your time and keep the charts a little bit cleaner, I've put or pre-labeled these in separate charts. We started from the low which was another perfect zigzag pattern with a B 38.2% extension. This one going right to the 61.8. Hit the 61.8% dead on the nose. And if we're going to move higher from there, according to Fibonacci Elliott Wave rules, you are supposed to retrace and test the previous fib level, which is exactly what happened. So looking at where we move from here after this zigzag was completed and the previous test, so where's the next move likely from there? And so that's where this new zigzag starts, exactly where the previous one ended. So we move to the A wave. Now we have a 61.8% fib retracement in the B wave, which gives us a 100% C wave extension. Now the 100% C wave extension is right here. So we're pretty close to it, which means that if Dr. Copper still has its medical license, if you will, we should be nearing a point of potential turn in the market if you pay attention to the metal. Or we go powering up to this 161.8% extended level, and that literally could take us in the S&P all the way up to here. So they kind of coincide together. So I think it bears keeping an eye on this chart of copper, and we'll continue to watch that in the future recordings, in addition to looking at where the S&P may go. Lastly, in this recording, I wanted to take a look at the VIX again because it's very interesting. People talking about the VIX a lot here, and I have to admit, in years past when the VIX was calculated on the OEX and it only did at-the-money near-term options, I made a lot of money trading the VIX. It is far more difficult now. They've moved it to the S&P. They trade at the money, one strike in, one strike out of the money with front and the following month options. And I think they tried to make it a better representation of the market as a whole by going from the OEX to the SPX, but it just doesn't seem to work out that way. So I agree with you, those of you that say it's difficult to trade the VIX. What I disagree with is the fact that the patterns don't matter, because I think the patterns are right lock and step with Elliott Wave. And if we put the Elliott Wave pattern on here, look at that. There's a wave 4 correction of 39%. That's 38.2. We're about to have our new Elliott Wave series released, and you're going to learn all of these types of things if you'd like to be involved in it. So that's showing us that we should come to the downside. So let's take the Elliott Wave back off and see where we are, and look what's happened. We've created another descending triangle. So we had the descending triangle, we broke to the upside. Now we've created another descending triangle. Are we breaking to the downside out of this one? We did not get a follow through to the downside. We came back up and closed right on the support level today. But are we going to break to the downside out of this triangle, follow the Elliott Wave pattern, the 5-wave pattern, and finally come down and fill this gap that we've been talking about in the VIX for so long? It'll be interesting to see. So again, trading the VIX I think is very difficult, but monitoring the pattern I still think has value. Hope you found this session informative, and please remember, leave us a comment so that you can get in the drawing for that free copy of the software. Hit us a like, and we'll look forward to talking to you again next time. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.